All right, C corporation, that's at the other end of the spectrum, and that C is just a subchapter in the Internal Revenue Code, subchapter C, that governs corporations, C corporations. That's what the C stands for. Same with S, it's subchapter S of the Internal Revenue Code. C corporation is the other end. They're a complete, separate, legal and taxable entity. It has the most protection from liability and responsibility of debts to the owners or shareholders. And its earnings, income, are taxed separately. Corporations or C corporations have their own tax structure, their own tax brackets. And but the negative part about a C corporation is in order to get money out as an owner, you have to take it out as payroll, which of course is taxed, or you take it out as dividend, which is taxed. So there's a double taxation, which you may have heard about in C corporations. The only reason why you want to be a C corporation is if you have to. Those are bigger corporations that are publicly traded. They have to be C corporations. They don't have a choice. Or if you're an S corporation that has a limited number of shareholders, and so if you have a lot of owners, then you may have to be a C corporation, even not publicly traded. So, but generally speaking, small businesses are not C corporations mainly because of the double tax issue. And also when it comes to liquidate or closing the business, there's some additional built-in gains tax that are troublesome, potentially troublesome. S corporations are very common, along with LLCs, for small businesses. Normally when we sit down with a client or a new client looking at their business entity choice, it usually comes down to an S corporation or an LLC. Those are usually what small businesses end up being. But just, there's not, one size does not fit all. Same thing with investing. It depends on what your risk tolerance is, what age you are, things like that. So everything just depends on your situation. The same thing with a small business. It just depends on what type of business you are and how many people are going to be the owners and what their involvement is going to be and things like that. Those are some of the issues we look at. But as corporations, when you first register with the Secretary of State, you're a corporation. If you want to be an S corporation, it's an election, it's a tax election. You make that with an IRS, it's a separate form to make an S election. Really what you're doing at that point is you have the same liability type protection, but you're changing it from being taxed at the corporate level to being taxed at the individual level, to the shareholder level. So it becomes a pass-through or pass-down entity as opposed to a separate taxable entity. That's really the main difference from a C to an S. But then you see what that does is it avoids double taxation issue. And so that's why the S election is very popular. I'm going to quickly jump through the general and limited partnerships. Those have been around forever, but when LLCs came out about 20 years ago, you don't see them hardly at all anymore. I mean, you do, but not near as much as you used to. And you see the definition there. The main difference between the two is in a general partnership, all the partners are personally liable. So it doesn't give you any liability protection. So you're similar to a sole proprietor from your liability risk. And in a limited partnership, there has to be at least one general partner that has risk. In a limited partnership, if you're a limited partner, you're only at risk to your investment. So if you invest $10,000 to be a partner in this limited partnership, that's the most you could potentially lose, is the $10,000 you put into it. And there's a lot of limited partnerships, a lot of publicly traded limited partnerships out there. I don't know if these guys ever invest in any of them. There's a lot of real estate trusts, real estate partnerships out there that you're limited to what your investment is. And so that's really the main difference between general partnership and limited partnership, is that there is the limited partners are only liable to what they invest, their liability, responsibility. And usually they're not involved in the day-to-day operations. They're strictly an investor, not in the operations. Limited partnership is fairly unique. Not every state allows it, Mississippi does, and they're limited to professional organizations like attorneys and doctors. And what that does is these doctors are together, but they don't want to be responsible for the other doctor's negligence potentially. And so they're limited basically to their negligence, not responsible to the negligence of the other doctor in this case, or attorney. And so that's where you see those. So they're fairly limited in nature. And again, not all states allow them, but Mississippi does. Now finally, a limited liability company, or LLCs, Again, as I said earlier, they're still relatively new. Been in roughly 20 years, and it's a state by state. Not all states allow them. And I think all states do now, but it kind of just trickled in. There was original about 6 states that allowed it. Then each state kind of added along the way, and even now, not all states allow different types of entities to be LLCs. For example, Mississippi does, but not all states allow people to be single-member LLCs. Whether it's just me, but I want to get some liability protection as an LLC, well, you can do that in Mississippi. You see that a lot for if you own real estate, is to put your real estate or rental property holdings in an LLC and be a single-member LLC. It gives you just an extra level of liability protection if there's any issues. But limited liability companies, they're kind of a strange entity. The best way to describe it is they're like a changeling, if you're any Star Wars fans. They change, they can take on different forms. You register as Secretary of State as an LLC, you still have all these options open to you. Even though I'm an LLC for liability protection, I can be a sole proprietor and not have to file a separate return, and I have some liability protection, but I'm still taxed like a sole proprietor. Or I can actually be a C corporation or be subject to the C corporation rules as an LLC. Elect to be taxed as a corporation and stay a C corporation. And he's like, well, why would I do that? Why would I just be a C corporation? I asked myself the same question when I first found that. I saw it a lot for S corporations. They're an LLC, but they file an S corporation return. Why don't they just be an S corporation to start with? Well, because Mississippi, if you're a corporation, is there anybody that owns corporations here? You have to renew every year, right? And there's a fee to renew every year, right? As an LLC, they didn't have that. So you save the cost of having to renew, or if you failed to renew, what happened? Your company was dissolved administratively. Well, last year, as part of the change in the Department of Revenue, they make you renew your LLCs now, but there's no fee. But you still got to renew it, and if you don't, again, you're dissolved and there's a fee to reinstate it. And plus they added, if you're out of Mississippi, you're not a Mississippi-based business, but you want to do business here and have to get a business license, they've added a $250 fee there to get some revenue from out-of-state businesses. So if you're an LLC, you need to make sure to renew, there was no cost to it. But that was one main reason. The other is there's less administration involved. As a corporation, you're supposed to have stock, bylaws, have annual meetings of your board. You don't have to have that as an LLC. So that's another reason why an LLC with Secretary of State, but then because you have this opportunity as an LLC to basically pick any entity type you want from there, elect to be taxed as a corporation, make the S election, file an S corporation return for IRS purposes, but you're subject to the LLC rules at the state level. So that's a nice way to do it.